Welcome to the WTR Small Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Mark Gordon, Chairman and CEO of Odyssey Marine Exploration, NASDAQ ticker symbol OMEX. The company is a deep ocean exploration pioneer that provides access to mineral resources critical to food production and the electrification megatrend. The company uses innovative methods and cutting-edge technology to discover, validate, and develop subsea mineral deposits. Also joining us is my WTR Equity Research colleague, Dimitri Silverstein. Good morning, gentlemen, and thank you for joining today's podcast.
Good morning. Thanks, Tim. Great to be here with you and your audience. Thank you.
Hi, Tim. Thank you for having me again.
Mark, just to kick things off, for those listeners who do not know Odyssey Marine Exploration, could you please provide an overview of the company and its corporate strategy?
Yeah, sure will, Tim. So Odyssey is a little over 30 years old now, publicly traded most of that time on NASDAQ under the ticker symbol OMEX. And we're in the business of deep ocean exploration. The first 15 years of Odyssey was focused on recovering valuable cargo from historic shipwrecks lost in the deep ocean beyond 1,000-foot water depth. Most recent projects have been to depths of almost 20,000 feet. And about 15 years ago, we decided to pivot to what we believe is a much more scalable opportunity, which is using the same team tools and technology, the big boats, the remotely operated submarine sonar, to find valuable mineral deposits on the seafloor. So we were a little ahead of this curve that we're starting to see emerge now and starting to get a lot more traction by governments around the world, which I'm sure we'll talk about during the podcast. So that's Odyssey's business. Our strategy is focused on developing projects in cooperation with governments, working inside single exclusive economic zones, as opposed to areas of the ocean that are regulated by the United Nations, where you need over 100 governments to agree on regulations. So we're focused on multiple jurisdictions, multiple mineral sets. It gives us diversification for both commodity risk as well as geopolitical risk. And Odyssey's leveraging that 30 years of experience to be able to take projects from an idea all the way through permitting and into production. So I think that makes us unique among some of the players that are out there today.
Thank you for that overview, Mark. I have to say, as an aside, as an avid scuba diver, you've just captured my imagination. So I'll now turn the podcast over to Dimitri Silverstein to ask a few questions.
Great. Thank you, Tim.
Thank you, Tim. Mark, it's been a few months since we last talked, so I'm very happy to catch up and get a chance to speak with you again. Let's start by updating our listeners on the case you've been litigating against the Mexican government for several years that has finally reached resolution. What do our listeners need to know about the case, its outcome, and your current intentions with respect to the phosphate resource you've been developing off the coast of Mexico?
Wow, that's a good question. That's going to give me a lot of time to riff because there was a lot to that question there, Dimitri. To go back in time, in 2012, Mexico granted Odyssey, or more accurately, our Mexican subsidiary, Exploraciones Oceanica, a 50-year mining license. And the targeted resource was phosphate, which is critical to fertilizer production and the food supply. Between 2012 and 16, we undertook a massive exploration and environmental impact assessment program working offshore. We applied for the one permit that we needed to bring the project into production, which is an environmental permit. That was denied by the Mexican government, I will say 2 administrations ago now, during the Nieto administration. We tried to work cooperatively with that administration, and we pretty quickly realized that their decision to not grant the permit was politically motivated, not based on the science. We had good science to suggest we should have received that permit. In 2017, we finally had to bring a legal case in Mexican court against Mexico. It went to the highest level government law court there. TFJA is the acronym for that court. And for the first time in 20 years, the 11-judge panel issued a unanimous decision in favor of Odyssey, saying the Mexican government, again, 2 administrations ago, acted unlawfully in denying that permit. Despite that court ruling, the government didn't comply with their own court, which subsequently forced us to bring an action under NAFTA in 2019. And so over a 5-year period, and it was a very expensive litigation, it was a $25 million litigation, but the asset was a multi-billion-dollar asset with the permit, this underwater phosphate mine. We pursued it. We prevailed September 17th of 2024. The arbitration panel ruled in Odyssey's favor again, saying that Mexico hadn't complied with their duties under the NAFTA agreement in terms of fair and equitable treatment for us as a foreign investor with this project. And they awarded $37 million plus penalty interest. And that's about $60 million today is that award, which sounds like a lot of money, but it was very disappointing because, as I mentioned, the asset was worth potentially a couple of $2 billion with the permit. And you'd see it in our stock price destruction. Any of the listeners to the podcast, if you go back and look at OMEX, from September 17th forward, you'd see a stock that was $4 and $5, a company with over $100 million market cap, be reduced to a stock that's been trading in the range of sub 50 cents since that ruling. Now, you may ask, why would people be disappointed with that size ruling? And there's a couple of reasons. One, the way we financed this $25 million in litigation support was using non-recourse debt. So had we not prevailed in this very complicated international treaty dispute case, which was a possibility, we would not have owed the $25 million back to the litigation funders. On the other hand, we owe the litigation funders a multiple of that $25 million on success. So anyone that was playing Odyssey as an investment or investing in Odyssey, I should say, playing the outcome of this NAFTA case was completely disappointed, understandably, by that outcome. And so they exited, in that time frame. Now, what we'll talk about as we go on throughout, I'm expanding your question now a little bit, is there's a lot more to Odyssey than that litigation outcome, and there's a lot more going on in the background, only some of which we can talk about right now, but we still believe there's a way to bring this project into production with a cooperative agreement from the new administration in Mexico, and we're working on that. So I'm sure you'll have more questions, and I went for a while answering that first one, but so redirect me or let me know what you'd like to dig in on, and we'll spend more time there.
Absolutely, Mark, and thank you. That was a very good background information for our audience. I think it really laid out the time frame and the effort that it took you guys to get to where you are now. And explain the reason for disappointing stock performance since September of last year. Now, since that NAFTA court decision, you formed a joint venture to develop this Mexican phosphate resource. Can you please talk about the other party in that joint venture, as well as its structure and financing? And where does the project stand now? What are the near-term expectations for moving it along, as well as how much capital, if you can discuss that, would be needed or could be needed to develop this resource into a producing phosphate deposit?
Well, you're asking great multi-part questions. So if I don't hit part of it, remind me to come back to it. But so look, we think the key to success in Mexico is having the absolute right partner. And we believe we have found the absolute right partner in Juan Cortino Gallardo and his company, Siembra. And more specifically in his investment company, that the abbreviation for is Caplat. Juan is the right partner for a number of different reasons. First, I'll start by saying he and I have been in discussions for 4 or 5 years. We've been looking for the right opportunity to partner on this project. Juan is a leader in the agri-food business in Mexico. Siembra is one of the largest sugar producers in Mexico. He's involved in other agri-food business and logistics around agri-food in Mexico. This is his space. Phosphate is, as I mentioned earlier, key to fertilizer, which is the key to crop production. So having a partner that's highly respected for multiple decades in the Mexican market is really important, I think, to the ultimate success of excuse me, trying to work out a deal to bring this project into production. Because of his experience, Juan serves as an advisor to the government. In addition to his operating companies, he's the director of a group, CNA. CNA represents 80% of the agri-food GDP. So it's a sort of a combination of a farm bureau and a government advisory group representing agriculture issues in Mexico. So again, we have the right guy with the right knowledge and the right contacts to present this project in the best light. Now, part of your other question is, what might a deal look like? And, there's only so much we can say publicly at this point, but we have already said that our desire would be to bring this project into production where it benefits Mexico, where there could be an element of this that's a public-private partnership. And frankly, it's a project that benefits the Americas, because having a world-class phosphate deposit in the Americas would be valuable to not just Mexico, but to North and South America as well, because right now 80% of the world's phosphate supplies are controlled by Morocco for the most part. China and Russia are big players as well. So having a secure supply is important for food security in Mexico and the Americas. One other part of your question, Dimitri, was around capital. Right now, any capital that's going to be needed to bring the project into production will be borne by the joint venture. Odyssey's subsidiary, EXO is the acronym we use there for Exploraciones Oceanica, and Caplat are 50-50 partners, and it would be the joint venture. So I think that's important for investors to understand. It wouldn't be Odyssey raising the capital for these expenses that we're about to get into. There's two different models right now. One model, indicates to us that for probably about $10 million, we could get from a permit into production. That assumes that we've worked out a deal on CapEx that would be required to modify some of the existing dredge ships that are owned by our operating partner. Our operating partner for extraction would be Royal Boskalis. They're, if not the biggest, one of the biggest dredging companies in the world, 100-plus-year-old company, very solid. And they've had a wholly owned subsidiary operating for over 25 years in Mexico. And we'd be using the same equipment with only slight modifications, so there could be some capital required for that, but not big capital. We're not having to buy ships. They exist. And I think the other important thing, while I'm on that tangent right now, is that Royal Boskalis' wholly owned subsidiary has received over 200 of the same environmental permits that we would need to activate this project, using, again, the same ships, same people, same technology. So I don't know if I hit all the parts of your multi-part question there, so redirect me if I missed a component of your...
No, you've done a really good job, Mark. The one thing that I just want to make sure that we mention is, as part of the formation of the joint venture, there was a $4 million infusion of capital into the joint venture to begin with. So,
oh yeah, well,
part of that 10 million is already in the bank, so to speak.
Well, a little different than that. Actually, Odyssey needed capital to continue to operate in this interim period while we decide whether there is a win-win deal to be done with Mexico. So Odyssey actually raised that money for its own purposes. But I think what's important, now that you point that out, I think the important point there is that our partner, Juan Cortino Gallardo, who I mentioned earlier, actually personally took a full third of that investment. He led that $4 million investment into Odyssey, even though his primary interest is this project, because he knows that Odyssey needs to stay around and be healthy and viable for Odyssey to be a good partner in this project. And so he voted with his own wallet on that. He was joined by other executives from his company, which I think, should be a bullish sign for other investors, especially people new to the story, where you have a joint venture partner that's willing to make a substantial investment into their joint venture partner's company. And they were also joined by other major shareholders in Odyssey, including our litigation funder. So I think it's a really strong group. So I'm glad you asked that additional question about the most recent raise. And I hope that clarified it for you.
It did, Mark. Thank you for that. Now let's talk about OMEX, and let's pull back a little bit and kind of look at the company in a sort of from a higher altitude. Your other projects include partial ownership in 2 of the 3 companies with exploration licenses in the Cook Islands, Cook Islands EEZ, or exclusive economic zone to be specific, who are looking to develop seabed resources of polymetallic nodules. So not phosphate, but actually nodules on a seafloor that contain multiple metals in them at concentrations that you just don't see in land-based mining these days. These companies, OML and CIC specifically, what can you tell us about these projects from the point of view of resource content and where these projects stand as your partners progress in their development?
Yeah, another great question. So as I mentioned in answering Tim's opening question, Odyssey's strategy is around developing a number of projects and taking them through what we call the value curve, where they're a desk-based idea that, hey, there could be something really good here. And on that count, for a second, I'll stop and tell you that one of the things Odyssey's developed is proprietary systems and processes to be able to identify the best mineral opportunities in the world. We look at something like 48 different attributes, but basically what it comes down to is there going to be economically viable mineralogy in an area? And is the rule of law solid? Do they have mining regulations in place? And is it in government we can work with? We've looked at already over 120 different possible projects, and we have 60 that rate at our highest rating right now. So there's a lot of these coming out of the pipeline. 2 of them are the Cook Islands project, coming back to your question now, Dimitri. And we're very bullish about those opportunities. The Cook Islands granted 3 exploration licenses about 3 years ago now. Odyssey has investments in 2 out of the 3. You named them, CIC, which is a company that's run by Odyssey's founder, who went and started that company. Odyssey has about a 14% stake in that company, CIC, right now. The other one, OML, we have right about a 6%, 7% stake in OML. Also, people we've done business with before. The management team there are people we've done other projects with as well. And the battery metals are a big part of our focus. Tim mentioned that in his introduction, that we're looking at phosphate and battery metals because they're both critical needs of mankind. And quite candidly, look, there's a lot of questions being raised about environmental impact. We could talk about that if you want to, but I can tell you that the environmental impacts can be mitigated and controlled. We can prove it. We're willing to be independently monitored to that. But with that said, we're looking, on the one hand, if we can help food security, whatever minimal impact we'll have, we're doing something good for mankind. And when we get to battery metals, it's going to power the green energy revolution. And so there's going to be a net positive environmental impact from those minerals. And that's why we're focused on those 2. So coming back to your Cook Islands question, the battery metals are polymetallic nodules, as you noted, multiple minerals. Most notably, though, they're heavy in cobalt off the Cook Islands. There are deposits on the eastern side of the Pacific that are heavier in copper. You need both for the battery metals, but cobalt is a pretty constrained resource right now. The 2 companies we have investments in they're entering almost their 3rd year now of their exploration program. They know a lot. They both know a lot about their resource, the environmental impact, everything they're going to need to get their mining or extraction licenses. At least one of the companies has already valued their resource, and it's a big number. But the nice thing about this is that the resource is visual. They almost look like black golf balls lying on the seafloor. They're exposed, so you can really assess what you have there. It's a hard pan bottom, and these small nodules are laying exposed on the surface. So really easy to evaluate for the resource value, but also easy for extraction, and an extraction that could be done in a very non-disruptive way. Here again, we're going to be able to use elements of systems that have been used for years. There's two different potential solutions right now. One includes lifting the rocks in a container from the seafloor. That's been done before at shallower depths, so we'll just have to adapt it for the deeper water there. It's about 5,000 meters. And the other would be using riser systems that have been used for many, many years in the offshore oil and gas business. And in fact, one of the investors in the OML investment is Transocean. So RIG is their symbol. They have the ships and a lot of experience, and they're already working on adapting existing oil drilling ships, the riser systems, to be able to use as lift systems for these nodules. So I'll do a summary for myself to make sure I hit everything. 3 license holders down there. Odyssey's got investments in 2 of them. We're intimately familiar with the management teams. We've worked with both of them before. Greg Stem, who runs CIC, recruited me to come join Odyssey, and he was the founder of Odyssey and the predecessor CEO. A lot of experience with him, obviously, a lot of experience with Hans Smit, who's the CEO of OML. The technology to make this extraction work economically and in an environmentally viable manner exists, and the resource is easy to quantify, so you know the values there. And so we're really excited about those. And I guess that goes back to my earlier point that anybody that was exited Odyssey because they were disappointed in only getting a $60 million NAFTA win. Not only are those people discounting the fact that there's still a deal to be done potentially in Mexico, as we just discussed, but also they're not at all giving any credit to these other exciting projects, the 2 that we've just discussed, and the other 60 we have in the pipeline ready to come out. Once we can demonstrate that this works, we'll be able to sort of rinse, wash, and repeat and do this over again.
Right. So just to follow up on the question, I believe it's OML that has put out a pre-feasibility study. I guess CIC will be coming at some time in the not too distant future. What are the next steps in moving these projects up the value chain, so to speak, so that a lot of the mining stocks, especially developing mining stocks, are usually valued as a percentage of the net present value of the resource. So you have to define that first of all, which OML has done, and then as you progress on that project and start obtaining permits and submitting environmental studies, you get bigger and bigger percentage of that net present value reflected in your stock price. So from that perspective, where do these projects stand in terms of their development and moving up that value curve that you mentioned?
Yeah. So, and I'll expand my answer to include Mexico, because there's kind of 3 projects Odyssey has significant investments in that are moving up that value curve. Coming back to your specific question on the Cook Islands, OML has completed their initial exploration and environmental study work and has, as you mentioned, received an independent valuation of the resource. There's 2 standards. Anyone that's listening, might not be familiar with these acronyms, but there's a Canadian standard, which is the 43101, and there's the Australian mining standard, which is called a JORC report. They're both the same. There you have independent geologists looking at your exploration data, cores and samples, and evaluating and appraising how much of that mineral is there to be extracted. In the case of OML, they already have a net present value currently, and this could get enhanced with further work. But presently, I could give you their website for your listeners, would be omlus.com. You could go take a look at how they arrived at this number. But $4.7 billion is the punchline on what their value is. What do they need to do next? The other part of your question is they need to finish their environmental work and their pre-feasibility studies to the satisfaction of the Cook Islands government, with hopes of either getting a trial extraction license maybe sooner or a full extraction license. That's an area out. I'm not plugged into those discussions with the Cook Island governments, but they are. When you look at CIC, they're at about the same place. They have not published a resource valuation yet. These are private companies. They can choose to release different information when they want to. CIC has not released that information yet. But, to back into a number there, CIC has an adjacent license area, so the mineralogy is exactly the same. And their current light exploration area, I should say, is about 10 times the size of OML's. So if OML's at 4.7 billion, you would assume that CIC's got at least $4.7 billion. But to be very clear for listeners, that number's not been provided by CIC. I have no idea what their evaluation is, but since we know the mineral's the same and their area is 10 times the size, I don't think it could be a lot less than OML. I think if anything, it would be more. So you're looking at, between the two of them, like $10 billion in resource, which, may sound mind-boggling, but when you consider that cobalt is one of the main minerals here, and there's a constrained supply in the world right now, and it's desperately needed for electrification. There's a really, good long-term demand for that mineral. And these projects will last, there's, 20 to 100 years of resource here. So, I mean, they're going to last well beyond our lifetime. And so that's where they are, so I think they're, now within the time frame where, and it's impossible to say how long it will take for them to get the approval they would need to move into production, but we're certainly getting into the range. And if I could go back to Mexico for a second, just because we're talking about the value curve and where things are on the value curve, Mexico's further ahead. We've already done the environmental studies. They've been fully litigated twice now. Once at the Mexican court with a unanimous decision, now at, NAFTA, through a NAFTA arbitration panel. We'll need to do, some work to tune that up, but a lot of that work is done. So we're really at the point on the value curve where if we can work out a deal to the satisfaction of the Mexican government and they're willing to proceed, we could be in production within 12 to 18 months there. And again, on that one I mentioned earlier, it could be as little as $10 million in cost in additional exploration and environmental studies costs to get to production there. And those costs will be borne by the joint venture.
Right. Thanks, Mark. That's a really good update, and it gives people at least a framework in how to think about the company. You mentioned people have invested in OMEX previously during the NAFTA litigation period. We're basically looking for a quick payout in case of a favorable ruling and a sizable reward. Now that this is behind you, how should investors look at OMEX and the value proposition it offers to new investors?
So let me stay in those numbers, and I don't know. I think you may end up sending out a note so listeners that are interested could see some of these numbers, what they look like. But if I describe them to you again, the internal net present value for the Mexico phosphate project, and I think we're being very conservative with our internal numbers right now, $1.3 billion is the NPV. There, Odyssey would own about 28 to 30% of that project. And the reason that is, earlier I said it's 50-50. Odyssey owns about 56% of our Mexican subsidiary that owns the 50% of the joint venture. So I don't confuse listeners. That's how I went from 50% to 30% in that calculation. But so if 1.3 billion is the number, that's an asset value of like $352 million. Okay, so hold that thought for a second. Using OML's own number, the one I referenced earlier and cited their website, 4.7 billion. Odyssey presently owns 7% of that. That's 329 million. I'm kind of building a sum of the parts here in response to your answer. And then with CIC, again, let's just use OML's number because we don't have CIC's. If we use 4.7 billion, we own 14.2% presently of that investment. That's $670 million. So, you add that all up, it's $1.3 billion. Cut that number in half. cut it in half again, cut it in half again. It's a huge multiple, I guess, is the punchline to your question there, Dimitri. It's a huge multiple. Those asset value, potential asset values are huge multiples to Odyssey's current market cap. And I think that's the opportunity for investors new to the story. Do your work, see what you think about how the space is coming along. We could talk more about that in a second, because I was in Washington 2 weeks ago, and I'd be happy to comment on the momentum I'm seeing from our own government, but also other governments around the world. I think the story arc here is the same as offshore oil and gas. If you look at it, in the 1950s and 60s, we knew we could extract oil from the ocean. There was no real need to do it. There was plenty of terrestrial source, but there was a catalytic event, and that was the Arab oil embargo of the early 1970s. And then you saw a massive shift to offshore oil extraction from terrestrial. And I think we're kind of setting up the same way. Look, 30% of our Earth is dry. Mankind has been extracting minerals from the dry part of the Earth for over 2,000 years now, since before Christ. And so, the resources are getting depleted. They're not tapped out, but we're going to need other sources, especially when you consider rare earths and critical minerals like cobalt, because China has a death grip right now on the terrestrial sources. Russia is a player. And then when you look at phosphate, the other part of our portfolio, Morocco, right now has, kind of a corner on the market there. Russia and China also have pretty big phosphate. So my point is that for any nation other than China and Russia that's concerned about rare earths and critical minerals, we're going to have to go to the ocean. And I think you see Odyssey positioned with 15 years of experience in this realm, 30 years of experience in the deep ocean realm, right now at the cusp of this wave that's forming. So will these, net present value of these assets play out? It remains to be seen, but I think momentum's moving in the right direction. And people that are listening in, if you pay attention to the news flow, I think you'll see things like it could well be an executive order coming out of the U.S. administration soon about figuring out how to promote seafloor mineral as a source of being able to stockpile critical minerals for the U.S. And other countries are thinking about this as well. So I rambled a little bit there, covered a little more ground than you asked about, but I thought.
No, it's actually perfect, Mark. It was a really good really good information that you provided. And I think it gives investors a framework for evaluating OMEX. You mentioned combined net present value of the resources of about $1.3 billion as far as your share of them is concerned.
Mm-hmm.
Now, clearly, they're not producing resources, so you wouldn't get full value for it. But
Correct.
for somebody in your stage of development, they should still be valued at something like 5 to 10 to maybe even 20% of the resource value. So when people thinking about looking at your market cap versus even a deeply discounted net present value of your ownership of these resources, there is a call to be made there. In the context that we're talking about, and before we get into the geopolitics of this, let's talk about the new member of the board that you've recently added, Larissa Pomerantz. I hope I'm pronouncing the last name correctly. Can you tell us what was the thinking behind expanding your boardroom, and what does Ms. Pomerantz bring to the table as a board member?
Yeah, so another good question. Larissa's great. So Larissa and I have been working together for over 6 years. She's the chairman of the board of Marine Applied Research and Exploration. I also serve on that board. MARE, which is the acronym there that we use, is in the business of using the same type of technology Odyssey uses, ROVs and other autonomous systems, to evaluate the marine environment. In their case, they're doing it for to protect the marine environment. So things like monitoring marine protected areas, doing fish counts, looking at coral health in different parts of the ocean. That's how they're applying the same tools Odyssey uses. So Larissa and I have worked together. I've always been really impressed. She's super smart. In fact, I brought her on as an advisor to Odyssey over a year ago on strategy to help us with strategy. And I couldn't think of a better person, much like I described Juan Cartino Gallardo as the perfect partner for a Mexican agriculture project. Larissa is the perfect board member for Odyssey because her background is in ocean environment. Her undergraduate degree from Harvard was in that realm, and she has this experience at Maury. In terms of strategy, I couldn't have found a better person. She was 14 years with Bain. At times, she ran elements of Bain strategy development for the company. So we've got a really smart person that really understands the ocean environment and really understands strategy. So she brings an awful lot to the board. And as you've heard from my commentary, it's not an unknown quantity. It's not someone that a board recruitment firm found for us. It's someone that I've worked with, and I know how much she brings to the table. So we decided it was worth expanding Odyssey's board to include her expertise. And, in the past year, watching her work on strategy at Odyssey, was clear to me she could add so much value for shareholders if she were a board member. And so, we just brought her on board, literally and figuratively.
Thanks, Mark. Sounds like she's going to be a great addition. So great to hear you guys strengthening the board and the oversight at the company. Mark, you sort of alluded to it in answering an earlier question, but let's close our discussion today by taking a moment to talk about the recent geopolitical developments. The U.S. president signed an executive order a few weeks ago that has the intention of accelerating the creation and expansion of domestic critical metals and minerals production. How has the political climate in Washington changed since the new administration, and what potential benefit, if any, can this executive order or perhaps future executive orders have for OMEX operations and your future plans?
Yeah, so another great question. So I'll start with a little color. I was in DC 2 weeks ago. I was up because my Mexican partner happened to be there as a commercial delegate on Mexico's negotiating team for some of their trade issues they're dealing with, specifically related to ag. So it was easy for me to fly up and get to spend some time with Juan. But I was also there because we're working on trying to get support for this project from the U.S. government. And coming back to answering your question right now, in 2 days, I had a series of meetings on Capitol Hill, Congress and Senate, a number of meetings with executive branch. And I've never seen more positive support for extraction of minerals from the ocean than I did in that last 2 weeks. And by the way, I spent 27 years of my adult life in DC before coming down to Florida to run Odyssey Marine. So I've been around up there, and I've never seen as much enthusiasm. I didn't realize, I was at, Commerce Department, they have a critical minerals group now. I was at House has an element of their natural resources committee is getting ready to potentially do hearings in the coming week or two about the viability of offshore. And as you mentioned, Dimitri, this executive order, which I don't think has been finalized, but it's heading in the direction of being a major validation from the U.S. government for the fact that offshore is a viable place for us to get minerals from. So I've never seen more support here at home. Likewise, as you scan the news around the world, Norway has done a lot to adapt some of their offshore oil and gas regulation, and they're looking at seafloor mineral extraction. Japan, China, everyone right now is realizing, kind of my basic analogy before, that the 70% of our Earth that's underwater has all the same resources we need, and they've never been tapped. And we're at a point in time, much like oil and gas was in the 1970s, where the technology exists. We can demonstrate it's viable economically and from an environmental impact standpoint. And there's a catalyst, which is growing demand for things like battery metals, and no easy way to fill that right now. Right now, most of the cobalt is coming from the Congo, where you've got child labor and hand digging, like artisanal mining. So we're going to need other places to find these minerals. Rare earths, obviously, there's a real constraint there. By the way, the Cook Islands, I didn't mention it, But there are rare earths in the Cook Islands, in the muds where the nodules will be coming from. They've already been studied. OML had a contract years ago with the U.S. government to study the viability of obtaining rare earths from there. So anyway, coming back to your question, I think governments around the world are really starting to focus in on the ocean is not only the next frontier, it's the realistic and probably only solution for the minerals that are going to be required by mankind. And I think the executive order that you referenced at the start of this question is the most visible sign right now that our government's paying attention to this.
Thanks, Mark.
Great. This has been an interesting and timely podcast discussion. Thank you for joining us today, Mark Gordon, Chairman and CEO of Odyssey Marine Exploration, NASDAQ ticker symbol OMEX. And also thanks to my equity research colleague, Dimitri Silverstein, for joining us today. And finally, a special thanks to the producer and editor of the podcast, my WTR colleague, Joe Brunetto. Thank you for listening. Don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you the next time for another edition of the WTR Small Cap Spotlight Podcast.